I think you're exactly right that the sanctions, et cetera, have undermined the dollar system in a major way, and in a way that its biggest proponents downplay, wrongfully so, in my opinion. When you go back to 2012, when we kicked Iran out of the SWIFT system, to me, that was like using an elephant gun to kill a fly. Because, had we not done that at the time, we would have still had that surprise in our bag. And when you look at how China reacted to that, here too, there's just not the appreciation. You would rarely hear that the Chinese were scared to death. The Russians were scared to death. Like, oh my God, they could hyperinflate our economy overnight by doing this. By 2015, China had the CIPS, China International Payment System, up and running. Second set of rails alongside SWIFT. Volumes on that have risen massively. I think it's doing, 45 trillion yuan. So, $7 trillion a year now through there. They've had other, and as a friend of mine said, it's not just like so much what the Chinese do. They don't invent it, but when they make their own version of it, it's better than yours. And that's what they do with CIPS. So it's not just a messaging system. It is also, it's messaging, it's settlement, it's everything. And so they've set up this entire, and then they set up offshore yuan clearing banks in every major gold hub in the world. You look around, there's an offshore clearing bank in London, Switzerland, Dubai, Singapore, Hong Kong. And so the rails are already all there. They've already have, the e-yuan's been being tested. Guess where they tested it first? In oil markets and gold markets. The Project Enbridge with the BIS has been discussed. Some of the oil guys, to me, I think there's maybe something there. I don't know. But I think your point is very, very valid, that is wildly underappreciated in dollar circles, which is they can absolutely just hit a switch. There's no more kicking them out. They've got all the factories. They're short energy and food on some level, but they're partnered with Russia. And we've angered the Russians as well. I mean, to me, the history books will not be kind about the weaponization of the dollar unless the goal was getting rid of the dollar system and pushing Russia and China together. I mean, how foolish from a strategic standpoint. And so, I think ultimately, when I look at dollar reserve status, there's a lot of debate around what that means. And to me, anytime people want to talk to me about that, I first want to define what are we discussing here? Are we discussing FX reserves? Because if we're the actual reserving of dollars, which is, in my opinion, what matters, right? The U.S. dollar as a reserve currency is the currency that is most reserved. Well, gold just supplanted treasuries as the biggest reserve asset of global central banks. If you would, there was an article in Bloomberg last week or 2 weeks ago that if you make adjustments based on it's an adjusted figure, so it's not a gross figure. As it stands now, the dollar is still bigger slightly than gold in global FX reserves. At $6,000 gold's bigger than the dollar. So it's not that far, much higher than here. Right. But on an adjusted basis, gold has already supplanted the dollar in FX reserves. And so will dollar reserve status, what will happen to it? Well, it's already being supplanted by gold. Like, nobody wants to hold yuan. People say, who's going to hold the yuan? Of course they're not going to hold yuan. Number one, back up. Anytime someone says to you, well, would you hold the yuan? Back up and ask them, first, in order to reserve a currency, you have to run a surplus against that currency for them to pay you in that currency. Who runs a surplus against yuan? Nobody, except for the Gulf Arabs and Russia sometimes. Every now and then the South Koreans do in semiconductors. Okay, so that's the only way you could even get yuan, starters. But then they've set up this system of it's our currency and it's our problem, which is if you do end up, you're a Gulf Arab, if you're a Russian, you end up with yuan payment for your oil and commodities. What can you do with that? Well, turns out they're the factory of the world. So there's a whole lot of really good stuff you could buy from them in yuan. And then if you have any yuan left over, take it to Switzerland, take it to London, take it to Dubai, take it to Hong Kong and exchange it for gold at any of these offshore clearing banks. And you want to take the gold home with you? Great, take it home with you. You want to leave it in Shanghai? Great. You want to leave it in Hong Kong? Great. You want to leave it in Switzerland? Great. And so what we're watching in real time is the supplanting of treasuries as premier collateral by gold for this parallel system. And, I think the dollar will always be the primary used currency. Number one, because we're running the biggest deficits. Number two, it's a reserve. Right? But the dollar, when you talk about usage, it's 90% dominant. Great. You know what? In Chuck E. Cheese, the tokens are 100% Chuck E. Cheese tokens in Chuck E. Cheese. And the world, the dollar is based on where we are. The world is Chuck E. Cheese, and the dollar is the Chuck E. Cheese tokens. But tell your kid, hey, just store all your money in those tokens. No, they want to win tickets and they want to go to the prize counter, right? Mm-hmm. And China's the prize counter. That's where the real value is. And I think what's going to happen is we're going to push this thing too far in Iran or elsewhere, and China's just going to go, look, switch is on, boom. You want to cut off our oil? Great. We're now demanding yuan for rare earths. We're now demanding yuan for the components from XYZ. Well, how's anybody going to get yuan? We saw this question around Iran in Hormuz around, people, when they demanded yuan for payment. People, well, that's stupid. There's China doesn't run the surplus or the deficits to supply the yuan. Exactly. That's what the Chinese are doing. How do you get yuan? It's very, very simple. You sell dollars. You buy gold, you take the gold to the Chinese, you sell the gold to the Chinese for yuan, you take your yuan, you go to the Iranians and say, here's yuan, my oil. Mm-hmm. So when, if we push this too far with China and they go, we're done here, pay us in yuan. Like we did to the Brits, by the way, in World War II, right? When the Brits needed money for us or needed weapons from us in 1940, reserve currency, 150-year history, great relationship. What did we say to the Brits? No, none of that sterling toilet paper. Reserve currency toilet paper. We want dollars and we want gold. Or you don't get your ships. You don't get your bullets. Same thing's going to happen. It's just a matter of time. What's the trigger? And so the Chinese are going to go, yuan or it doesn't sail. Okay, well, what do we have to do? We got to go buy a bunch of gold with dollars, print dollars, buy gold with printed dollars. Buggy. Take the dollars to China, or take the gold to China, sell gold to China, obtain the yuan. Here's your money. And so it's very interesting to me in the light of all of this. People say, oh, Luke, that is so far-fetched. Guess what the number one export of the United States has been for 4 of the past 5 months as the U.S. trade deficit has narrowed to the celebration of all the, of the Trump administration? Non-monetary gold. 4 of the last 5 months, the United States, the mighty United States' single biggest export has been non-monetary gold. Bigger than airplanes. Bigger than pharmaceutical preparations, bigger than the automotive industry, bigger. Where is it all going? China, Hong Kong, Switzerland, some to the Gulf countries. Where's it going from Switzerland? The Swiss are very precise with their records. Guess who Switzerland's biggest export market has been over these past 5 months? China, Hong Kong, some of the oil countries. I think China may have already flipped this switch on some level, at least for certain goods, right? I think they're already saying, we'll send you all the rare earths you want for gold. None of this toilet paper dollar crap. None of these treasuries that you print at will. Forget that. Send us gold. And I think we've been forced to, because what lines up with 5 months ago? That's when Besant and Trump met with the Chinese in South Korea. Oh, by the way, the 5th month, it was only the second biggest export. So anyway, that's a long-winded answer. So I think the dollar reserve, is the dollar going to still be the reserve currency? Gold's already supplanting it as a reserve asset. And I think that's going to continue. And everything we're doing is going to keep pushing us in that direction.
So here we're looking at the long-term chart of gold, and it looks like it's going parabolic now. But actually, that's something which does happen from time to time. And I'm just going to turn this into a logarithmic scale, which is more telling. And we're going to focus on the period from 1971, that would be August 1971, when Nixon announced that gold was coming off the gold standard and that there would be no more gold. So gold at the time was around $35. And it went all the way up at its peak to $850 just here. Now, that's 1971 through to January 1980. So if gold was $35 in August 1971, $850 in January 1980, what was the annual rate of increase? Let's just ask ChatGPT that. If gold was $35... Hello there. Hello, ChatGPT. If gold was $35 in August 1971 and $850 in January 1980, what was the annual percentage rate of interest or increase? We're talking about the compound rate of increase.
The annual compound rate of increase was about 46% per year.
So there we have it, 46% per year